Welcome to Dr. Fred Markets. This is not financial advice. The gap between those who understand finance and those who don't is growing every year. Markets, crypto, artificial intelligence, they just require attention. You showed up today. You're on the right side of that gap. Let's make it count. Let's go.
Luxury drinks will beat your index fund and your crypto. Non-carbonated drinks are quietly taking the spotlight, and Wall Street hasn't priced the sugar rush yet. CNBC reports flavored waters, hydration drinks, and functional beverages are stealing shelf space from seltzers and sodas. Monster and Celsius rode this exact shelf migration from weird gas station cans to multi-billion market caps. Now Big Beverage is scrambling to lock in the next wave of healthy indulgence before your ETF even notices. Here's the play nobody talks about. Luxury is moving from handbags to what's in your fridge, and the profit math is disgusting. A basic soda sells for maybe $1.50 a bottle with thin margins. A premium hydration elixir with the same water plus electrolytes and a pastel label sells for $3 to $5, often with higher margin than beer. You're not just buying liquid, you're buying status, habit, and a daily ritual that your budget forgets, but your cash flow feels. Now zoom out. Global soft drink market, over $500 billion a year. If even 10% of that spend walks from sugar water into non-carbonated functional stuff, you're talking tens of billions shifting brands, supply chains, and stock winners. This is not about taste. This is about who owns the story in your head every time you're thirsty, stressed, or pretending you optimize recovery. Here's the part you're not supposed to notice. Beverage companies are quietly turning your kitchen into a vending machine that prints their cash. Look at how Starbucks turned coffee into a luxury daily tax. Now copy-paste that model into hydration, protein, adaptogens, zero-sugar focus drinks, sleep tonics. Same brain circuit, tiny purchase, constant repetition, zero resistance. You don't negotiate a $3 drink the way you negotiate a $30 car. So the margins compound quietly while you argue about interest rates on Twitter. Every bull market has a sneaky luxury category that outperforms while everyone watches the shiny tech. In the 2010s, it was premium athleisure and coffee chains. In the early 2000s, it was tobacco and junk food quietly crushing indexes. This cycle, it's health-washed liquid luxury, sold as wellness, priced as status, produced like a commodity. Now the twist. This luxury drink boom rhymes perfectly with how Bitcoin trades. Bitcoin is digital luxury. No cash flow, no dividends, just brand, scarcity, and belief. People justify paying any price because it means something to them. Freedom, rebellion, future money. A $5 vanity drink is the same psychological bug. I'm not just thirsty, I'm optimizing recovery and performance. Both assets live on narrative, not utility. You don't need a $5 hydration drink to survive. You want it. You don't need Bitcoin to pay your bills today.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
You want exposure. So when liquidity is loose and vibes are high, both go vertical together. Luxury at the grocery store, luxury on the blockchain. Here's the mechanism nobody explains. When Bitcoin runs, like sitting above 77 cal today, it doesn't just pump other coins, it pumps risk appetite. People feel richer, looser, braver. They say yes to nonsense. NFTs, SPACs, $18 smoothies, $7 adaptogen lattes, $5 nootropic waters. Discretionary spend inflates first in tiny, repeatable luxuries, not cars and houses. So your signal isn't just price charts. Watch the cooler at your local store. When new non-carbonated brands start crowding out old sodas and energy drinks, and people actually buy them at gross prices, that's a real-world indicator of risk on, disposable income on, and narrative-driven consumption. When those shelves stall or contract, wallets are tightening, and speculative assets will feel it next. Here's your one new skill. Treat premium drink shelves as a micro-index of risk appetite. Track 3 things. How many new functional brands appear? How quickly they go from top shelf to eye level to end cap displays. How long they last before getting replaced by the next miracle juice. Fast rotation with higher price points. Liquidity party. Static shelves, discounts, and clearance stickers. Risk is dying at the edges. This is not financial advice, but here is the truth. If you only watch Bitcoin and ignore what people overpay for at the fridge, you miss half the story. So here's what you actually do. 1. Build a stupid simple fridge index. Once a month, snap photos at the same big supermarket. How many non-carbonated functional SKUs, average price, which brands are spreading. You're training your eye to see the consumer risk cycle before it hits earnings calls. 2. Compare that to your portfolio bets. If your fridge index is exploding, more SKUs, higher prices, better placement, that supports a world where luxury narratives keep winning. High-end brands, aspirational consumer stocks, and yes, narrative assets like Bitcoin. If it's shrinking, respect the risk. Trim the dumbest speculative stuff first. 3. Stop pretending $5 drinks are nothing. Add up your monthly luxury liquid spend. If that number annoys you, redirect a slice into actual ownership, a beverage stock, a consumer ETF, or just cash reserves instead of sugar cosplay. You learned one thing today. Your grocery cooler is a live feed of human risk appetite, priced in overpriced hydration. Use it. Don't just drink the narrative. Trade around it. This is not financial advice, but it is the truth no one on CNBC will say out loud. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.